Here to discuss is Michael Jones, Chairman and CEO of Caravel Concepts. Michael, glad to have you on the show this morning. Can you just talk to us a little bit about how, the oil ban is hitting green energy stocks and the world, or at a time where the world is reckoning with these surging kind of oil prices?
Sure. Well, good morning and glory to Ukraine, first off. But also, I think energy investors writ large, have to think anything that they were thinking about the energy markets 3 weeks ago, you just have to throw it away because Russia's invasion of Ukraine has changed the entire equation. This week, investors are waking up to the fact that the second largest oil producer in the world, Russia, is likely to be banned from global markets for the foreseeable future. And replacing all that lost power is going to have a renewable component. Now, that means we've had a big surge in the stock prices this week, but even with that surge, you're only back to break even for the S&P Clean Energy Index, while big oil, the traditional energy names, are up 30%. You ask, why haven't they done any better? Because the problems that have plagued clean energy for the last year just went from bad to worse. The problems were high input costs, and their inputs of aluminum, steel, and nickel just went hyperbolic because Russia's a big producer of all of the above. So huge opportunity for renewables, but they're facing some fairly significant headwinds as well.
Which is actually right on point with my next question here. Many are saying higher prices at the pump. That's, of course, potentially going to encourage people to adopt electric vehicles. But the challenge is, at the same time, we're seeing nickel prices just soar. Doubling the other day to the point where the LME had to halt trading. That's, of course, a top material used for electric vehicle batteries. You're also having the chip shortage and production issues as it relates to supply chain issues. All of that happening, leading to higher prices for electric vehicles as well. How do you see this all playing out?
So let's separate nickel as like its own little nightmare for renewable energy, because I do think because essentially what we're seeing in nickel is kind of like what the Reddit crowd did with GameStop and some of those other stocks, where the Wall Street got caught short. And there's a huge short squeeze going on because Russia it provides 20% of high quality nickel, and people are getting obliterated. That is a short-term problem that will recede with time. The steel price increases, the aluminum price increases, losing Russia as a producer, those are not going to fade. You also have to recognize that the renewable energy industry really depends upon China for major components. The solar panels, the nicad batteries are made in China. Now imagine if China participates in helping Russia evade sanctions and gets caught up in the whole sanctions regime. Then the renewable energy space faces a whole new set of problems.
Such a good point there. That in context with the ban just seemingly reigniting kind of this debate over the importance of energy independence, and really just the role renewable energy should play in all of this. Could this moment really move the needle towards a more sustainable future, accelerate that needle, I would even add there, beyond the short-term implications of this Russian oil ban?
I would say you have to think of this in kind of two phases. I think the 10-year prospects for renewables just got a whole lot better. Because ultimately this is going to force a transition into renewables. I also think the behavior of the providers of energy, Russia obviously just appalling, but we also need to recognize that Saudi Arabia and U.S. oil producers are essentially helping the Russian war effort by not increasing production. You had major CEOs of energy companies here in the U.S. in the Wall Street Journal in February 18th say basically they don't care what happens to American consumers if oil gets to 150. They're not going to increase production. Now, granted, that was before the invasion, but even so, that attitude and that dependence upon, what we'll have to call bad actors in Saudi Arabia and Russia, this whole situation has elevated those concerns. I also think it gives the Biden administration an opportunity. I think right now, Wall Street is telling big oil, you take this cash windfall and you give it to us in dividend increases and stock buybacks. I think the Biden administration could say, hey, there's a war going on, and by not increasing production, you're helping the aggressor. And what we want you to do is we're going to force you to suspend dividend increases and stock buybacks until you increase production 20, 30%. I think that's the kind of message that would resonate really, really well with the American people, and it would help the 10-year period of time between now and when we can actually make a bigger reliance on the renewable energy sources.
What's the reality, to your point there, of the Biden administration doing that? Because I will say in President Biden's speech, he did seem to signal the first half of that, really kind of, pointing out that these oil companies may be taking profit at a time where there are people dying in a country because of an invasion of an aggressor like Russia. The second half of that, in terms of taking punitive measures to stop stock buybacks, that hasn't happened yet. What's the probability that that's going to happen, if the administration could get so bold?
You know what? I will have to confess that the Biden administration, the State of the Union, great tone, great theme in terms of let's not lower wages, let's lower costs. But the two biggest costs that are facing America, the things that were a nightmare in the CPI release this morning, are food and energy. And that so far, they've been incredibly bold and incredibly successful in foreign policy, but their economic policy has really done nothing to address these dramatic cost increases that American consumers are facing. I think, as I said, you got to put the screws to big oil. They're not going to change their behavior just because you ask them to. You're going to have to declare an energy state of emergency. You're going to have to forbid stock buybacks, and you're going to have to forbid dividend increases until they get production up. Also, they've got an opportunity to change the farm subsidy program, where you basically tell farmers, look, we normally pay you not to grow crops. This year, we're going to give you your subsidy payments no matter how much corn and wheat you produce. Because remember, Ukraine is the breadbasket of Europe. That's another big source of inflation that's going to get a lot worse if something isn't done. So I do hope that we see the Biden administration get a lot more bold, a lot more courageous, and frankly, a lot more effective in addressing the economic consequences of this war and not just the geopolitical consequences.
Really quickly here, I only have like 30 seconds, but I want to ask you this question. Could we get to a happy medium here in terms of we meet the moment in which we are at right now with the reality that we need to produce more oil, but we also continue the acceleration to clean energy? Can we do both? We are not at the moment, but is that a reality that we can get to?
I do think it is, but what the tragic problem is that we have relied on really bad actors and not nice governments like Saudi Arabia and Russia for our oil. And now renewables, well, nickel, aluminum, steel, Russia has a big chokehold on that. And of course, China is such a dominant provider of so many of the input components that we're going to have a strategy to transition away from that reliance upon bad actors in the renewable space. If we're going to have a secure transition 10 years out to a renewable world where greenhouse gases are reduced, but also we're not so at the beck and call of folks whose long-term goals are not the same as Western democracies.
Michael, really appreciate your insight. Thank you so much. Michael Jones, Chairman and CEO of Caravel Concepts.